Can I buy a house for less than 20% down? Well, let's talk about it. Hey, how's it going? It's Struzyna with the Gunderman Group at Keller Luxury International, and today wanted to cover this topic of how much you need to put down in order to buy a house. What I wanted to cover is a couple things. One is what you can do sort of nationally, like what is potentially available to you as a home buyer or an investor, as versus what is going to actually succeed in this Bay Area market, because they are two very different things, and I think it's really important to pay attention to when you're considering what you should do and what you can do here in this market before you jump in. So when you get some value out of this video, hit that like button and subscribe to the channel, because I'm going to continue to put out weekly content just like this, and you're not going to want to miss it. So let's go. So first and foremost, I am not a lender. I am not licensed to do loans and mortgages and all that kind of stuff, but I know conceptually what's available. This is the purpose of this video, is to give you the sense of what's available so you can go have a more educated conversation with your lending professional. As to what is possible, what is available out there, let's talk about it at a variety of levels. So number one, there's all cash. Obviously, if you are frugal enough, or if you've saved aggressively enough, or you make enough money to have all cash to buy a house, you can obviously just pay for it in cash. That speeds up your process, that makes you more competitive. I did a video on that last week, link to it right up here. But you can really do a lot with your cash. But if you decide you don't want to use all of your cash to buy a house, you're gonna go get a loan. You can get loans in many different increments of down payment size. And this is where a lot of the hang up comes in our market. So I wanna get into this of what's available and then what will actually succeed or give you the best chance of success here. So when you're at 20% down, that is the typical number that most people are trying to hit, because that gives you the best loan amount and the best terms, and the not needing what's called private mortgage insurance, which is an added payment if you're below that 20% down figure, because there's added risk of default and such on the loan. So that's what most people are talking about when they're going to get a loan, is a conventional 30-year with 20% down. You can of course do a 40%, 50% down if you have the amount of cash to make that happen. But most people are talking about that 20%, possibly a little bit more. And then you should definitely discuss with your lender what their incentives, what their rates, what their points, if you put more cash or less cash, look like. But know that that 20% is the most common option. Then you start to back down into the 15 and the 10% world. Now, as I mentioned a second ago, there's this thing called mortgage insurance. And if you use a lower down payment, when I say lower, I mean below 20%, you're gonna have to pay this mortgage insurance. And the whole point of that is simply an insurance policy on behalf of the lender, because your ratios of how much you owe versus how much the house is worth are closer. And if the market dips and it defaults and it's underwater, they could lose money. So they want an insurance policy that you have to pay for. Now, usually when you're above 10%, it's not quite as expensive as if you're below 10%, which we'll get to in a second. But just know that exists. Make sure you ask the question. If you're seeking less than 20% down, know that private mortgage insurance is going to be a thing, and you got to ask about it. So now you come into this lower than 10% world. Now you start to get into a variety of kind of, I won't call them exotic, but less common loan products here in the Bay Area, but are some really fantastic options around the country. You've got an FHA loan, you've got what's called a 203K loan. You've obviously got more conventional, just lower down payment loans, but there are different options at 3.5% and even 5% down that give you the flexibility based on the cash you have available. And so all of them are different, especially when you get into that FHA or that 203K style loan. There are going to be different underwriting criteria, not only on you as the borrower, but also as you as the house. So they're going to want to see things like a clear pest report and some other things that make it a little more challenging to get in a contract, especially here in our market where it's totally as is. But just know that there are some very, very low down payment options that you can use, and depending on what neighborhood you're looking in and what agent you have and what lender you have, it's not impossible, but it's definitely a lot harder to succeed. But there are instances where those make a ton of sense. So that gives you a really broad overview of how much you could put down, but let's now talk about our market here in the Bay Area and what is realistically going to give you the highest chance of success. Simply put, more cash is better. anything at or above 20% is going to be viewed very favorably. If you're at 20, 25, 30 and above, people are going to consider that very strong. Your ratios are really good. You're going to be able to potentially absorb a shortfall in an appraisal, and I'll link to an appraisal video up here so you can see what I'm talking about. You just look stronger to the seller. As you start to go backwards from 20% down to 0, you look like a bigger risk to be in escrow with. If there's an appraisal shortfall, you likely don't have the cash to cover it, and that's a risk to the seller of the deal falling apart. You also may not be as strong of a buyer because you just don't have the cash position, right? So there's a number of things you're signaling with that lower down payment that makes it harder for you to succeed, especially when there's so much competition at or above that 20% down figure. Now, that being said, that's not to say you can't win. It's just a little harder and you have to be a little more strategic. So if you're one of these people who's in that 10, 12, whatever percent down, and you're looking for an opportunity, here's a couple of tips for you real quick. Number one, look at properties that are a little bit more in some outlying areas, and are not like in the core of Oakland, Berkeley, Piedmont, whatever, because it's going to be a little more challenging for you to succeed because those are just so popular right now and you've got so much cash flowing into those housing markets. All right, so that's number one. Number two, look for houses that have been sitting on the market for longer than, say, 20, 21 days. That's really, in our market, showing that something's languishing. Maybe it came back on the market because it fell apart, or maybe it's not getting the attention it needs. Maybe it's overpriced, maybe it's poorly presented. Whatever it is, there's an opportunity there because those sellers might be a little more desperate, might be willing to work with you a little bit. In Alameda, I actually had a client who had a 10 or 12.5% down loan, and we got them into a townhouse here locally on the island that had been sitting for over a month. And luckily, and this is the third tip, the agent was from out of town, so he didn't really know all the norms and the customs of pricing, of negotiating that we do here. And so we were able to get him to accept our offer, even with that lower down payment, because he was from Sacramento. And that is a little more typical there, to see those lower down payments, so it didn't throw off the alarm bells for him immediately. So that's another option, is look for those out of town agents who don't know the customs and the norms of the market you're shopping in. But in any event, above all, make sure regardless of what pre-approval or what a down payment amount you're going for, you get fully underwritten. I've done a ton of videos, I've talked about this all the time on this channel. If you go shopping in this market and you can confidently say, even though we're doing 10% down, we're fully underwritten, your lender calls the agent, gives them the story as to what you're doing, why you're doing it, etc. That is ultimately what you're looking for, because then you can pull that loan contingency and get a step closer to being more successful. So hopefully you got some value out of that, and when you did, hit that like button and subscribe to the channel, because I'm going to continue to put out weekly content just like this, and you're not going to want to miss it. So without any further ado, this is Struzyna with the Gunderman Group at Keller Williams Luxury International signing off for now. See you on the next one.